That is the bell at the New York Stock Exchange there as the market comes to a close, plunging at latest count more than 1,100 points. At worst during the day, it was down some 1,500 points. The Dow's worst week now in more than 2 years. I want to bring CNN's Claire Sebastian. She is at the New York Stock Exchange for us. Claire, what led to this market meltdown?
Well, Jim, it was really a variety of factors, a perfect storm, if you will. The bell has just rung, ending one of the wildest days that we've seen on Wall Street in, frankly, more than a year. The measure of volatility, the VIX, has more than doubled today. That really shows that we're entering a new chapter here. But it really started from the early part of the trading session. The Dow dipped more than 350 points. Then at lunchtime, it almost came back into the positive, and now we see what has happened at the close of the day. So, you know, the jobs report was out on Friday. That was one of the factors, perversely, because it was very good. 200,000 jobs were added in January, and wage growth was at its highest since 2009. But that has led traders to really start to worry about inflation and whether the Fed might move in and start to hike interest rates faster than they had originally expected. That could eat into corporate earnings. The other big unknown here is what's going on in the bond market. 10-year bond yields on U.S. Treasuries are up at 4-year highs right now, and that is leading some to be concerned that as we edge towards the 3% mark, that critical point, that people might start to move out of stocks and into bonds. But the bottom line here, Jim, is that this market has run so far for so long. It's still, even with the losses of the last few days, the Dow is up around 20% in the last 12 months, and many feel that a correction was simply long overdue.
Claire Sebastian there at the stock market for us. For more now, I'm joined by CNN Global economic analyst Rana Foroohar. Rana, you heard the talk there. The interest rates rising makes money more expensive, never good for a stock market. Is it as simple as that?
Well, in some ways, yes. I mean, the crazy thing for everybody listening at home is that we got some really good economic news on Friday. Wages are finally going up after many years of that not happening. But ironically, markets don't like wage hikes because that also makes interest rates go up. And when interest rates go up, the markets go down. That's typically what happens. The big question is, how long is this going to last? How big is it going to be? There's a lot of people, I'm one of them, that have been saying, hey, you know, Wall Street and Main Street have been disconnected for a number of years now. We need a correction. It's natural. The underlying economy is still pretty strong. The question is this going to turn into more of a panic? Are people going to, as they see their 401ks potentially going way down, are they going to start to say, oh my gosh, we're going to pull back from spending? Is it going to become a behavioral shift that then has bigger fallout in the rest of the economy? We've just confirmed there that in terms of points, today the largest point drop in history, but just to be clear here, percentage-wise, 4.6%, that's a big percent, but there have been many days where bigger, 1987, 25% of the market dropped, so points can be somewhat misleading. You've heard the president, Rana, as I have, tout the better business climate here in the U.S. since he took office, the Republicans' tax reform plan, fewer regulations, etc. That's not enough to hold off issues like interest rates, etc., or a correction? Well, you know, what's ironic is the two things are connected. I mean, a lot of Democrats were actually very critical of this tax cut and of the fact that, you know, you're getting this stimulation into the economy at the end of a recovery cycle. It doesn't feel like it, but we've been in a recovery since 2009. So it's actually kind of natural at this point that the economy should be slowing. But of course, the president came in. He made a lot of promises. He wanted to bolster that economy. He, of course, wants the economy and the markets to be strong through the midterm elections so the Republicans can hold Congress. All that meant that the Republicans, through their tax cut, have thrown a little bit of kerosene onto the fire of the economy. Some people are worried that that's now backfiring, that maybe growth is happening too fast, interest rates could get hiked, and that makes the party start going the opposite direction. It's a very tricky calculus. These are nervous times for anybody who has a retirement account. As they watch a market like this, people at home, I'm not telling you to recommend them economic or rather investment advice here, but how should folks at home read this? Well, you know, I will give a little advice, and that's don't make any sudden moves. If you don't need your money soon, leave it where it is. I mean, people really often make the worst possible move, which is when there is a sell to get involved in that panic and to say, oh my gosh, I've got to move my portfolio around. Now is not the time to do that.